Hello everyone, welcome back. Okay, so that means that the property has to be appraised to get the current market value.
Correct.
Based on the value is the 55% LTV that they can get. Now, what will happen? Let's say there's a life expectancy here in Canada, which says it's 80 years and 85 years, right, for the women. So what if somebody takes a reverse mortgage at their age, let's say 65, and another 20 years to go? So after 20 years, if anything happened, if that reverse mortgage will be adjusted with the house price?
So a few points we want to touch on. So with Home Equity Bank, we have a no negative equity guarantee, which means that you will never owe more than the home is worth. So even if we see a market correction down the line, clients will never be asked to make a payment. They will never owe more than their home is valued at. Second, in terms of qualifying, clients from the age of 55 can qualify up to 55% of their home's value. So if in your scenario, a client is 65 years old, takes out a reverse mortgage, that home is going to continue to appreciate. So the money that they take out, and you can see it on the calculator, like I said, that interest will never outpace the growth of the property, even if you calculate at a modest growth. And right now we're seeing very healthy growth in the real estate market in GTA. And we're blessed in the GTA in the fact that the demand will always outsupply the supply. So it's a great position to be in. So a client who comes in at 65 can rest assured that their property is continuing to accrue. And so the benefit here is if you take a reverse mortgage and with those proceeds you invest in more real estate, now you have two properties that are really appreciating and you're letting the market do its thing, and at the end of it, you're going to have two properties to leave to your estate as opposed to one.
So if somebody decides to reinvest that money, then they can reinvest it.
Correct.
Right? Now here is the reverse mortgage is payment free.
Yes.
Unlike equity line of credit.
That's right. And
Right.
so an equity line of credit is a callable debt, which brings up an important distinction from a reverse mortgage. So a line of credit, in the event one of the applicants, so let's say a spouse, two spouses, one of the spouses passes away, the remaining spouse may not qualify for that line of credit. So they have to either make a payment, come up with a shortfall, or they have to do requalifying. Whereas with a reverse mortgage, if one of the two spouses passes away, the remaining spouse stays in the home, the reverse mortgage carries on, and there's no interruption. So it gives couples that peace of mind they need, that in the event, for example, one was working, one was a stay-at-home parent, for example, you know, there's that sense of, well, what do I do now, right?
Yeah.
So it's very important at that stage of life to not have to worry about facing, uncertain future.
This reverse mortgage payment, who will decide the payment? Is the client will make his own decision, her own decision, or the lender, reverse mortgage bank, will decide the monthly payment?
Absolutely, the homeowner. We are one of the only banks that put the homeowner in the driver's seat. They get to decide if they want to make that payment. They get to decide if they change their mind. They can absolutely do so. They get to decide how long they want to renew. They get to decide all of that. And that's why it's very important. We're seeing tremendous success and growth in this space because, you know, as we're seeing the great boom in reverse mortgages is because the pandemic gave us a great opportunity to learn. You know, previously, families had to make decisions about how to take care of their elders. So we're seeing a great conversation starter of, well, we know that Canadians want to age in place. In fact, Ipsos came out with a poll with over 90% of Canadians want to age in place.
Yeah.
So that means I myself want to make sure that my parents are not going to, community living, they're not going to a retirement home. The reverse mortgage gives us options, gives us the ability to provide for in-home care, and it gives us options for people looking to retire and have not maybe saved enough. So it puts the client in the driver's seat on both ends. So they get to decide, do I want to make that monthly payment or do I want to use the proceeds to do something else with it?
Okay, that means that it is completely freedom for retirees. So unlock the financial leash so they can go and spend as their own?
Absolutely, yes. So if they don't want to make that monthly payment, they don't have to.
Okay.
And let's say a couple of years go by and they decide, well, I'd like to. They just simply have to make a call, and they can
Okay.
absolutely change that.
All right, but they can carry forward, carry on as long as they want without making any payment and stuff.
Correct.
Right? Okay. Like I got a question from one of senior citizen. All expenses increasing, right? And his income actually decreasing. Now, at that point, since he doesn't have any, restriction from reverse mortgage, so he can want to take as much as he can. So, is there any inflation taking place here on the monthly payment, or there's no inflation actually?
So the clients decide the term, right? So they take a 1 year, 3 year, 5 year term, and then the interest rate depends on the term that they take. So for those terms, the interest rate is based on the term that the client raised. So like any bank, our rates are set every quarter depending on where the market is. But in terms of inflation, what I would suggest to the client is this. What we saw with the housing boom this last year is unprecedented. Unfortunately, Canadian salaries have not kept up pace. In fact, the national average is just under $60,000. So when we're looking at an average home in Toronto being in the millions, someone earning $60,000 can't possibly think that they're going to pay off that mortgage in time for retirement. So then what do you do, right? So it's important to give clients an option. I don't necessarily want to leave the community and the neighborhood and the house that I lived in for the last 2-3 decades that have all my memories. I don't necessarily want to sell and move north. So in this stage of our lives, we want to stay in our communities. And a reverse mortgage is that tool that allows you to retire your way where you want to live.
Okay, so here is interest rate. How interest rate is actually calculated here? Is that there's a term there, or there's amortization there? Is it re-amortized the whole mortgage,
So
if I understand, the reverse mortgages?
Because we don't require payment, there's no amortization period.
Okay,
and so the clients decide how long they want to stay in the reverse mortgage.
So what about sorry to interrupt, what about the interest rate? How the interest rate is actually decided here by the lender? What interest rate and how long the client will carry forward that rate? Just like...
So let's say you take a mortgage. This is a reverse mortgage is similar in the sense that you can decide a 1 year, a 3 year, or a 5 year term. And at the end of let's say they take a 5 year term, it auto renews.
Okay.
So at the rate at that time. So we don't know where rates are going to be in 5 years, but the clients receive a notice that their term is renewing. If they want to renew 1 year, 3 year, 5 years, it's important to note that there's no renewal fees. There is no requalifying at all. And so it would just auto renew, would keep going until the client decides to move or sell.
So, Sandy, when I take the reverse mortgage, is that bank own my house?
Absolutely not. So similar to a traditional mortgage, there's just a charge on title. So if you apply to a bank, to a mortgage for one of the big fives, they don't own your bank. And it's the same here. It's no different. There's a charge on title so that when you sell, then we are paid out.
Okay, so is that a reverse mortgage is offered by the regular bank?
Home Equity Bank is the largest in Canada. We offer reverse mortgages across Canada, and we are the largest in this space. The traditional banks don't offer reverse mortgages.
Okay, so the traditional bank doesn't offer the reverse mortgage. To get the reverse mortgage, you have to contact Home Equity Bank or some other banks, I don't know yet, name, probably will come with that information in future. But right now, Home Equity Bank is one of the banks, they're offering the reverse mortgage.
Home Equity Bank, we are the only bank that's dedicated to the needs of clients over the age of 55. Reverse mortgages is our sole focus because it's where the most needs of our clients lie.
As we discussed about the equity line of credit and the mortgage, okay, a reverse mortgage, the consequences is, so home equity line of credit is there's no interest rate, is open. reverse mortgage, is this open or is it locked?
So in the term, when you're comparing a HELOC and a reverse mortgage, so with a HELOC, you're paying interest on the amount that you use. And this is very similar to a reverse mortgage. You're paying interest on the amount that you use. So with a HELOC, you have to make a monthly payment. With a reverse mortgage, you don't have to. With a HELOC, the debt is callable. And similar to what we said earlier, if one of the two spouses passes away, the remaining spouse may not qualify. Whereas with a reverse mortgage, if one of the spouses passes away, nothing is changed in terms of the loan. It continues as normal. So those are the main difference. And with a HELOC, again, depending on the amount and the need that the clients are facing, if they're looking to purchase a property or there's a specific goal, traditionally a reverse mortgage is going to offer you a much more generous, I guess.
It's more freedom.
More freedom to do what you want, yes.
Yeah. So what happens if somebody needs more money, okay, at the end of the reverse mortgage? Is that the property will be appraised again to get more money, or how does that work?
So we offer refinances because we understand that the client's needs change. So maybe when they took out the reverse mortgage, they were thinking of doing renovations, but maybe in later stages they need round-the-clock care. So absolutely, we do offer refinances, and we take the current value of the home and are able to extend more money.
Viewers, we'll take a short break, and after a short break we come back and talk more about reverse mortgage.